All right. What's up, team? How is everyone doing? How is everyone doing? Let me see. Hassan first, of course. Love to see it. How are you doing, bro? I'm doing great. Thank you for asking. I am doing great. How are you doing? How are you doing? Let me see. Ciao a tutti from Italy. Love to see it. Good morning, good afternoon. For some people, already good evening. I reckon for some people, it's quite late already. Of course, we're well, depending on if you already noticed the daylight time savings, we're earlier than usual, depending on where you're at as well. Let's see. Finally, some bearish PA on the dollar. Exactly my thoughts as well. Finally, something to actually work with, which is quite nice. We had a quite nice week as well, which is quite interesting. Hello, Master Ari. Thank you for all your free content. No worries. Thank you. Let's see. Morning, first time here. Glad to be. Welcome, Juan. Welcome. Happy to have you here. Let's see. I love your recent video on one candle tells you everything. Yeah, I reckon that's a video that I also saw a few comments on that as well, that we can potentially, because that's literally only the beginning, as in you can combine that with so many things. If you combine it, for example, with market structure, it gives you so much understanding. It gives you a great understanding. If you notice this videos I make on sweep versus run on liquidity, give you such a better understanding of what we want to potentially do. So yeah, it's definitely a video that we can incorporate into other concepts as well. Very interesting. Please add subtitles. For the most recent one, I added a few subtitles, but I'm not too sure how to go about that, to be honest with you. So I'm not too sure. Summer vibe comes from your camera. Yeah, that's the I owe it all to the country, Colombia. Let me see. It's always summer here. Let's see. Your views are everything. Thank you. Let's see. Waiting for the Bitcoin analysis. That's very interesting, actually. Very interesting. What we actually mentioned in the previous forecast. That will be very interesting to go over as well. 2 trades this week, 1 win, 2 losses. That's all right. That's nice. Or that's 3 trades actually. There's 1 missing. That's nice. I personally took what is it? I took 4 trades, I believe, which 3 winners, 1 break-even trade. So it was for me it was a great week. It was also forecast-wise, etc. was just a phenomenal week, to be honest. Let me see. Do share a link to me. I will inform. Let me know, Hope. Let me know. Not sure what that is, but let me know. All right, let me see. First time seeing some lights behind you. Yes. First time actually I have the thing open there as well, so you can actually see the garden a little bit. But yeah, it's nice. Where are you located? I am in Colombia. I'm currently in Colombia. Hello, Papa. I was just watching your A to Z guide. I love it so far. Love to hear that. That is very underrated, to be honest, the A to Z guide. I'm going to keep repeating that, but if you have not watched the A to Z guide yet, there's a lot of still golden nuggets in that. It's not that my old videos, that's the funny thing about how I teach, at least that's what I believe, is that I don't change the concepts. It's just a deeper layer of understanding overall. It's the same concept that I've always been using. So every video that I make is the same exact concept that I've always been using. That's the funny thing. Not trying to feed into that shiny object syndrome. At least try my best not to. Yeah, the weather is quite nice. It's always quite nice to be here, to be honest. Always quite nice. Can't complain. I saw one more. Let me see. I'm new here. Glad to have found your channel. Glad to have you here. Love to see it. Yeah, right here. By the way, to quickly touch on that as well, there is a YouTube Discord created. It's not by me. So the reason I have not shared it just yet, and I'll also touch on that really quick. The reason I've not just shared that yet, I wanted to touch on it in a live stream actually. So if you do have the link, then you can share it. Just know that I'm not involved in that Discord. And the reason I state that so clearly is because if anything sketchy, of course, I somewhat trust the people that are running it, but if anything sketchy does happen with that particular Discord, then I'm not involved, okay? So be aware of that as well. I have nothing to do. I'm not affiliated with that. It's just some people set that up. So keep that in mind as well. Hey, my man, which prop firm / broker do you use for futures, if I may ask? Think about futures only. Yeah, this is really interesting. And for prop firms, I have done Apex and Elite Trader Funding, I believe. That's the ones. Both quite interesting. If I trade my personal account, it's Interactive Brokers. So IBKR, if that makes sense. Let me see. I saw one that I wanted to go over, but I'm not too sure where it is. I'm getting lost. I'm getting lost here. It's all right. It's all right. All right, let's see. Let's actually go over the forecast first before we do anything else. If you do have questions, of course, you can leave them behind and we will go over them as well. Are you on Telegram also? Yes, if you go into the description of this live stream of any particular video, then there is a Telegram right there. It's usually where I do announcements, etc. If I need to quickly say something, I announce it on Telegram most of the time. So if you want to stay up to date, it's all my Telegram. Let's see. All right, let's go over the forecast. Let's remove my face to remove any distractions that we might have right here. Now, on the dollar, it is very interesting right here because I like to look at what we are dealing with at current price action. From that price action, I like to stack up arguments either towards one side or towards the other side. So I see, all right, we have overall an argument between bullish and bearish price action. So which side is winning? The side that has the most arguments is currently winning. Which side does the most has the most arguments currently? Bearish price action. So right here on the monthly, we already mentioned that we have a new monthly candle right there. That first candle is a rejection. Since that first candle is a rejection, second candle should be a down candle. This is something, again, we use in the mentorship all the time. It's candle signs. And that second candle should now reject and close as a down candle. If that happens, then what should we do after we come into a fair value gap like that? Well, on a monthly basis right here, we should now ideally create, based on candle signs as well, a new fair value gap as soon as possible. So in these next few candles, if they are not down candles, that becomes very suspicious right here. Now the question becomes, I have this line marked out right there, that previous month's low. The question is, do we stay below that previous month's low, closing below it, or do we want to sweep that previous month's low right there? Now, how do we view that? First, going to the weekly, nothing much has changed. Keep in mind, next week, we are creating, most likely, again, a weekly fair value gap continuing lower. So keep that in mind. If we do want to continue lower, of course, that's exactly what we want to see as well. If that does not happen, that becomes extremely suspicious. If we trade back into this level right there, the first candle low, and we do not create a fair value gap lower on the weekly time frame right here, I would argue higher prices. So right here on the daily, this is where it gets interesting. So how do we know if this is a sweep or a run on liquidity? Again, really quick difference between a sweep and a run on liquidity is a run on liquidity is where it keeps running, like it already says in the name, right? It keeps running lower. So it's not respecting that discount rate. It will seek a lower discount rate. Whereas sweep is we trade back above it right there and we target opposing liquidity. For example, what we see here with this high, swing high right there, is a sweep of liquidity, which started this whole run as well. Now, this is the first sign of a potential run on liquidity, because I actually mentioned this in the most recent video, I believe, which was uploaded today, where I said, if it's a run on liquidity, the ideal scenario, did I mention it? I'm not too sure actually. It might have been another video, but anyway, the most, any most recent video, maybe a short as well. If we close below a recent low right there that we take, and we close below that with a fair value gap exactly overlapping with the low that we just took, that is already a great sign that we actually want to run the liquidity and do not want to sweep the liquidity. But that's only the first sign, because right now, ideally what we would want to see is price coming back towards that daily value gap to then sting into it and then respect that. So now it becomes interesting to know, all right, when can we do that? How can we do that? We have CPI on Tuesday. And since we have CPI on Tuesday, that will likely bring in a lot of volatility in the market as well. So Tuesday, with CPI. Monday, Tuesday, I don't want to trade that until after CPI. So with CPI, if we can sting into that right there and then continue lower off of that, we get a down closed candle on that particular day. That's exactly what I would want to see as well. So in the meantime, I'm still bearish unless CPI closes with a huge up candle disrespecting these daily fair value gaps right there. Then I would be bullish right there. So if we do not respect both these fair value gaps, then right there I would be bullish. In the meantime, bearish price action is higher probability in my opinion right here. So with that in mind, let's take a look at, I added one to the forecast list right here as well, which is Russell. And the reason I did that is if you're familiar with the indices, then there's a hierarchy in indices, meaning we have Russell at the top. Then we have ES, that's the smaller brother. Then we have NASDAQ as well, the little brother of ES. And then YM is even smaller, then DAX is even smaller. Meaning that hierarchy, the higher it is on that list, the more it's going to lead by example. And ES is going to follow Russell. NASDAQ is going to follow ES and Russell. YM is going to follow NASDAQ, ES and Russell. So a great example is, and what I always like to look at as well, here we have YM, and YM in itself is looking quite bearish, but NASDAQ, NES, and Russell right there had no reasons to continue lower just yet. So if that happens, then what essentially happens is that YM starts to consolidate because it will get dragged by the other indices to continue higher, whilst YM itself wants to continue lower. So that leads to overall 50-50 on bullish side, 50-50 on the bearish side. So that leads to a consolidation. It's also why we are seeing a consolidation right there. So that's quite important to understand. If you do want to get very advanced in the indices, is it a requirement to understand? No, definitely not. Because right here, if we do take a look at ES and NASDAQ, we already saw, and we were perfectly fine to just trade it with whatever we saw on that respective instrument as well. Now, looking at Russell is quite important. And this is regarding all of the indices. We have been struggling to push higher for quite some time right now. We have been failing to create fair value gaps higher. We have been sweeping previous week's high, previous day highs, etc. All-time highs are constantly getting swept. I think, and this is extremely premature, what I'm going to tell you right now, I think we are in for a bigger retracement towards the downside. But the reason I say that is extremely premature is because we only have one candle, one down candle right there to work with. So ideally, what I would want to see right now on the 4-hour time frame, for example, I want to see a fair value gap towards the downside right there, hold and continue lower to actually confirm that we do want to continue lower. So there is a potential sign, there's an argument to be made that we can continue lower. Is it confirmed yet? In my opinion, not really. But is it also confirmed that we want to continue higher here? In my opinion, also not really. So I would rather look at shorts right here. With NASDAQ is definitely one of the more interesting indices. We see that 4-hour value gap continuing lower off that. New 4-hour value gap would be ideal to then confirm the continuation lower right there as well. That could be very nice price action right here. And that's definitely what I am looking at. YM, this could be very nice if we do want to continue lower with the other indices and the other indices are ready to continue lower, because of course YM in itself is quite weak. But the only thing is that NASDAQ and ES were just too strong still to actually continue lower. So that's very important to understand. Same goes for Russell right here. Again, a first indication of a sweep. What did we mention for the dollar? Ideally, we want to see the swing high we take a fair value gap exactly overlapping with the swing high. That's the first sign, if that does not happen, that it might be a sweep on liquidity. Again, what is the confirmation that it is indeed a sweep? When we now respect the bullish side and we create a bearish fair value gap right there continuing lower, then it is indeed a confirmation of a sweep right there. So it's just early signs that we might want to continue lower right here, which definitely will be quite interesting overall. I do really like it right here. Will definitely be interesting. DAX in itself also could continue lower. Not too eager to get involved in DAX myself. We do have this weekly fair value gap right there, which again, we can also look to target, potentially trade off of. Again, not really interested in trading off of unless we get very clear signs that we do want to continue higher. Because again, this is just following the other indices as well. Now, this is where it gets interesting because we have quite a lot of opportunities. Again, I say potential opportunities. It is not necessarily opportunities, it is potential opportunities because there's quite a lot of things going into it still. Australian dollar, US dollar right here. We swept those lows. Eventually, we had the no resistance run, as I like to call it, also just known as low resistance liquidity run. where we can move very fast right there. Now we create daily fair value gaps, which we can continue higher off of with as well fair value areas right there. So this in itself could be very interesting to now continue higher off of as well. Again, I want to wait for CPI. So my main action during the week will be after CPI. It will be later on during the week. So mainly Wednesday, Thursday, and Friday. If CPI has miraculously a beautiful setup right afterwards, I'm also willing to take that to potentially hold it for a little longer as well. But ideally, Monday consolidation, Tuesday with CPI, a huge sting into the daily fair value gap that we are hovering above right there, to then continue higher off of that. That is, of course, a utopia. We have to react, but that could be very interesting, mainly expecting higher prices right here. Very, very nice to eventually target this weekly value gap. And once we reach that, I'm not necessarily expecting lower prices off that. I am more so expecting a rejection. So still to continue higher, where eventually this right there becomes the target as well. Then Euro US dollar, which in itself, I'm not too interested in getting involved, to be honest. Now, monthly, we see we're just following through off that month for value gap high, right? And we have this marked out because that is swing high on the daily, but it's also a weekly fair value gap right there. Again, just seeing that to know where we can potentially reject a little bit. So not necessarily interested in looking for lower price off that, just a rejection to continue higher. So a retracement area. Now, right here, when we do look at this, the overall discount arrays to get us there are not as nice in comparison to, for example, Australian dollar, US dollar. So that's also why I do not necessarily like it here. The price action itself on EU is also a little bit debatable. I would argue it's not the nicest price action. I do believe there are better pairs out there. So I currently have it on my waiting list, not actively looking to get involved just yet. But if we do have signs in the form of potentially new 4-hour value gap higher off of that, that could be very interesting as well eventually. Then if we take a look at GU right here, on GU, what do we see? We did not reach into that month for value gap actually right there, which is quite interesting. But what we do see is on the daily and the weekly, we are continuing higher. Now the daily, this is exactly what we were talking about as well for the dollar, right? So we have this high sitting right there. Ideally, we would want to see a fair value gap exactly overlapping with that high right there to continue higher off of that. So if we get that, that again is super interesting. If Monday is, for example, consolidation, Tuesday sting into that with CPI to continue higher off that, beautiful. That's beautiful price action right there. If that, of course, can happen. If that does not happen and we do not respect this area, then be aware as well that that could eventually continue lower a little bit. So be aware of that. I would want to see this area, if there is a fair value gap sitting right there overlapping, to be respected. If not, then we could potentially continue lower. So be aware of that as well. New Zealand dollar, US dollar, same story, that we can look to continue higher as well. That daily value gap, definitely quite interesting. Again, we can see that this one candle tells us that this wants to trade into the fair value gap most likely, right? To then potentially continue higher off of that as well. So this as well, really interesting price action right here to continue higher. US dollar, Canadian dollar. Now, I have it on the waiting list. I am personally not too keen, not too eager to get involved in US dollar, Canadian dollar, or US dollar JPY. And the reason for that is because overall these pairs here have been the biggest consolidations. As in, this has been consolidating for what? Since when? It's, well, throughout the whole year. Throughout the whole 2024, we have been consolidating right here on US dollar, Canadian dollar, the bigger picture. So I'm not too interested in looking to get involved. I have it on the waiting list. And the reason for that is because if CPI right here does have a sting into a fair value gap to continue lower, and we create new fair value gaps lower off of that, then I will be interested, because then we can definitely look to target lower and target these two lines right there, which is on top of my head, a weekly fair value gap right there below as well. But in the meantime, not too eager to get involved, want to wait. US dollar CHF. Now this is definitely overall quite interesting. Yes, it is also been consolidating. We mentioned this sweep last forecast right there of that high. Then we came into the weekly, or sorry, the daily fair value gap right there, which could push price higher. Now this is very important to understand. I have made a 50-50 price action video before. That area right there is the 50-50 area. That is where people get trapped, and that is where you want to wait. So what do you want to wait for? you want to wait for the 4-hour to fail to follow through. What is that? Not holding. So this fair value gap right there does not create a new fair value gap higher off that. I'm not interested in those longs, by the way, right? I want to wait for this fair value gap essentially to fill. Then with a new fair value gap lower, that's when we can say, all right, this fair value gap is now failing. This fair value gap is now showing signs that it wants to fill. So the longer we wait essentially with this new 4-hour fair value gap, with 1-hour fair value gaps guaranteed as well below that are very interesting, to then continue lower off that, to then reach that target. That's exactly what you would want to see. Now, right here, we have reached this low and we have a weekly fair value gap sitting right there. This weekly value gap could be very interesting to trade into. So if we do want to do that, then this daily fair value gap is looking very nice to continue lower off of that. Is it ideal? Because we do not have that fair value gap exactly overlapping with that low. No, it's not ideal. And what that means is that we have a little bit more bullish intention than bearish intention when we do not have that fair value gap exactly overlapping with that low, which can be seen by this candle as well. That's a lot of bullish intention, right? And what that means is that you can potentially expect a little bit of a bigger retracement into that as well. So that is important to know your confirmation right there. 50-minute, your sharp turn to then get those lags lower eventually, to then get involved targeting that weekly fair value gap right there could be very interesting right here. US dollar JPY is the only one from the Forex majors right there that is not on the waiting list. It's also not on the interest list. It's just not super interesting in my opinion. And the reason for that is because yes, we do have a target in the form of this weekly swing low. If we look at the daily, then we have a lot of daily fair value gaps. Overall, the premium array right here that we can continue lower from is just not too clear in my opinion. It's not too clear in comparison to all the other pairs. So since we do have quite a lot of potential pairs that are definitely interesting, we can get very picky about our price action, right? If one pair is not showing enough interest, perfect, just move on to the next one. So US dollar JPY is just not ticking all the boxes, perfect. I'll just move on to the next one because we have that choice as well. So right here, we can definitely create a daily fair value gap to continue lower off that, depending on if we want to trade back into that low right there on that Monday or not. So then if that creates a daily value gap to continue lower off that, could be very interesting as well. But again, in comparison to some of the other pairs, it's just a little bit meh, just a little bit meh. Now, let's see. Then we see silver right here. And if we take a look at silver, the price action past week was very nice actually. And we just reached this swing high right there on the weekly. Now, can we continue higher or will we retrace a little bit? Currently, I would argue that this again is quite tricky. And the reason it's tricky is because we are running into that swing high. And what are we doing currently? We're respecting that. So the same premise that we had with this swing high, we're also respecting that right there. Seen through that candle again, seen through that wick that we are seeing. So in that moment, we want to be careful that we do have a daily value supporting the idea to continue higher off that, which in this case, we do not have. So the difference between this respect to that high and this respect to that high is that this had a daily value gap to continue higher off of that. So this respect is not that crazy. Where here, we do not have a daily value gap to continue higher off of that. So in that sense, I want to be more careful here as well. Ideally waiting for a new fair value gap to continue higher off of that as well. And then simply said again, waiting right there for a new discount rate, sorry, to continue higher off of that. Then on gold, let's see. Gold, really quick. We are at an all-time high. I don't like all-time highs. If you follow along with the forecast, I hate all-time highs. And the reason for that is, not hate all-time highs, that's a big word. The reason I don't like all-time highs and the reason I don't like to trade them is because when we are above an all-time high, we don't have a clear target to the left anymore. Meaning we are likely going to chase price or we're trying to call top in the market. And if we look at ES, for example, right here, at the beginning of the week, we were also at all-time highs right there. But then we have a clear top where we can then look to continue lower a bit. And then eventually we have such a big retracement that now if we create a fair value gap higher, we can look to target this all-time high again, which in the case of gold, that's just not the case currently. So if anything, I would want to wait for a bigger retracement right here on gold. If we create a clear top in the market, for example, a clear sweep with a nice fair value gap continuing lower, that could be interesting. But in the meantime, I want to wait, don't do anything on gold myself right there. Now, Bitcoin, very interesting. Last week, we mentioned again all-time highs, of course, are going to be reached. Now, all-time highs right there, when they get reached, and when we haven't reached all-time highs in a very long time, which is also something you'll see on gold very often, every time we reach those all-time highs, we get a huge sweep. And that happens for quite some time until people almost get used to those all-time highs eventually. And when people get used to those new all-time highs, that's exactly when we can then finally continue higher. So that's also what we mentioned right here, that when we do reach that all-time high, expect some kind of big retracement. What happened? Big retracement into the daily fair value gap. That's important to understand, because don't get stressed out by that. That's just a continuation higher to eventually reach new all-time highs again. So right here, we create this 4-hour sharp turn. That's beautiful, to be honest. This is beautiful, was also beautiful. The delivery right here on the lower time frame, not too beautiful, I would argue. This was beautiful to then reach all-time highs again right there. Again, I do believe right here that we can also again reach those all-time highs. And since we are getting a little bit more comfortable above those highs, I do not necessarily think this is a sweep. Again, if we look at a sweep further on, it's also, there's logic behind it, right? When we sweep a high, then the whole idea behind sweeping high is that we are taking liquidity to then match that with opposing liquidity. So for example, if we look at Australian dollar, US dollar, then in the form of this low right here, that is liquidity. That might be a breakout trader right there that is looking to take shorts and has their stop loss above recent swing highs. So if we want to take that liquidity and sweep that liquidity, it should indeed be a sweep. It should happen fast. We should not give them the chance to mitigate their entry, to mitigate their trade ID. Meaning we should not give them a chance right there to get out of their position. We should suffocate their position, because again, not me, not you, potentially, I'm not sure what kind of job you have, but if you work at institutions, financial institutions, central banks, then you might have this job. But what do they want to do, central banks, financial institutions? They want to suffocate their position because they get filled right there with an opposing order. They essentially sell, so they buy. So then what happens right there? Well, if someone gets taken out right there, then again, they match those orders with each other, where someone can sell their position to someone that is buying their sell position right there. So we need that liquidity, in the sense of we need that opposing liquidity, because that is important to also use our take profit essentially. So that is quite important to understand. And that will also make you then realize, once we get comfortable above a high and we are not suffocating a position and we give people so many opportunities right there to get out of that position, that's not really a sweep of liquidity. That is just a run on liquidity, almost in disguise. So right here, we can definitely look to continue higher as well. And eventually, again, since we are at an all-time high, I'm personally not too interested. I'm not saying it can't continue higher, but as a trader, I'm just not too certain on how far it can still continue higher. Yes, can we use Fibonacci? 100%. But I do not think Fibonacci is accurate enough to actually look at forecasting highs on its own without having another PE rate towards the left side of the chart or something like that. So right here, I am not too interested in getting involved. Again, bigger retracement or a clear top in the market to then continue lower off of that. But in the meantime, I would personally want to wait. Can still continue higher for a little bit right there. Crude oil. So this has been a mess overall, not been too interesting in my opinion. And if we look at this, on the 4-hour, we have just had seek and destroy conditions right there. What are seek and destroy conditions again? When both sides of the market are not holding, so meaning both sides of the market fair value gaps are not holding. They are not creating new fair value gaps higher or lower off of previous fair value gaps. How can we see that? This fair value gap right there is not creating a new bullish fair value gap. All right, that's not too crazy, right? Because then we can just look to continue lower potentially. This bearish fair value gap is not creating a new bearish fair value gap off of that. All right, that is seek and destroy. Because now we are not creating new fair value gaps on both sides of the market. Yes, a bullish one, but again, what are the chances of that one holding? Not high. So that is extremely low probability to get involved as well. Unless you're a seek and destroy trader, then of course, this is your domain. This is where you would want to get involved. But I'm personally not that interested in trading seek and destroy. It's always a bit of it requires more focus, where just trading conditions is probably the easiest thing you can do in your life when it does come to trading. So in this moment, if we do want to continue higher, which I do think we can still look to continue higher, then again, we have this swing low right there, which we can potentially continue higher from. Simply said, because that's the only discount rate that we have right there. There's nothing else to deal with. So if we want to continue higher, then a sweep right there to continue higher of that could be interesting. I'm not too eager to get involved right here. I would want to wait. Bank Nifty. Now, we mentioned last week, Bank Nifty was absolutely beautiful. It was beautiful price action right here. And we mentioned the story writes itself on Bank Nifty. Then we saw this move into the daily value gap, which we also expected higher prices off of that. So when we saw that, that again is where we can now create a new daily value gap, which we have sitting right there as well, which is very small. On the 4 hour, it's a little bit more clear. 4 hour order block right there as well, which we can come into to continue higher off of that. That is, again, currently beautiful price action with the target this high, which is also, I believe, an all-time high. Yes, it is. So currently that target is, that high is target right now. All right. If you do have any question, please do let me know. Please let me know. Wait, Hope, let me set it correctly. Let me set it correctly, Hope. Wait, I'm going to remove your role really quick to then add it again. All right. Should be good now, Hope. Should be good. Should be good. Look at GBP JPY. Let's do it. That one is quite interesting, to be honest. That one is quite interesting. Because on GBP JPY, I was at the beginning of the week right there. It could be interesting for high prices, but we never created a daily value higher. All right. Then we could target the lows. Now, those lines I have marked right there are weekly order blocks, weekly fair value areas, and weekly fair value gap right there. Currently, first candle is rejecting nicely to potentially continue higher. We have GBP news as well supporting the ID, which, by the way, if you look at the economic calendar, we only have US dollar news and we only have GBP news. So that leads me, again, that I only want to trade a US dollar or something with the GBP. So GBP JPY is perfectly fine. Now, if we look at this, then on the 4 hour, we run into, again, that first resistance area, which again is also the first 50-50 area. What you would want to see right here, or at least what I want to see personally, is any signs that we might want to continue lower. I want them to be gone. So if we want to continue lower, we have this 4 hour value gap, which we can continue lower from. All right. Well, on the 1 hour, we now have this 1 hour value gap, which we can continue lower from. Perfect. So if we want to continue lower, we should now create already down candles to continue lower actually, which at this moment in time, it's still a little bit 50-50. What I would want to see here is 1 hour, 4 hour value gaps to continue higher and to take a trade off of those to potentially confirm them on 5 minutes, 15 minutes, etc. to continue higher off of those. This is definitely looking quite interesting. There's potential in it. There is definitely potential in it right here to continue higher as well. We'll definitely keep an eye on it. Definitely. Let's see. Do you trade in Bank Nifty? Well, to be honest with you, I'm not too sure where I can actually trade it. I'm not too sure if if I can just trade it through CFDs, but it could be interesting because it is quite clear, to be honest. At least last week, etc. In the current conditions, it was very nice. It was very nice. So this week was a very good week for me. Took 2 trades, one in Bank Nifty and one in Nifty, and both winners. Indeed, now the chart makes very sense. Thank you so much. Without you, I was lost. Love that. Love that. Love that. Yeah, this week was a beautiful week, to be honest, regarding price action. A beautiful week. Let's see. Please, how do you do a top-down analysis from monthly to the 1 hour, where it can easily be refined to trade with one ST, then entry, unlike high time PD rate, where we need an ST and new fair value gap to enter? I'm actually going to, my next video, believe it or not, was going to be on top-down analysis. So how you can do a top-down analysis. So I'm going to refer to that one in the meantime as well. To go over that, because that's going to be the next video that we're going to go over as well. Let's see. You say that if you want to enter on a 15-minute fair value gap, the fair value gap needs to be created in a kill zone. But if we have an Asia major, Australian dollar, New Zealand dollar, JPY pair, can we use the 15-minute value gap that was created in Asia for entering? Yes, 100%. Since, for example, again, you mentioned it perfectly for the people that are not too sure what an Asia major is. An Asia major is anything with JPY, Australian dollar, or New Zealand dollar in the ticker name. So that can be New Zealand dollar, US dollar, can be New Zealand dollar, JPY, whatever it may be, as long as it has either Australian dollar, New Zealand dollar, or JPY in the name. That's an Asia major. An Asia major can be traded during Asia kill zone. So if you have a fair value gap during Asia right there, that's perfectly fine to trade off of as well. 100%, 100%. Let's see. Let's see, Bitcoin to 200K. What would be the market cap if Bitcoin reaches 200K? Is that actually realistic, or is that crazy? What is AKA? Sorry, AKA is also known as. So in other words, or etc. What is a low resistance liquidity run? Let's go over that. So on Australian dollar, US dollar, we had a low resistance liquidity run as soon as we traded above this high right there. And then eventually, the low resistance liquidity run where we can expect price to run is this high, is then this high right there. Oh, sorry, this high right there. And afterwards, it's this high as well. A little bit higher, this high right there. And the reason for that is because we have no fair value gaps. We have no order blocks that are not traded into just yet, where the last one was this one right there. Before we then have no other premium rate that we can trade into, which has not been traded into before. And when we have that, that creates a low resistance liquidity run. I also like to call it as a no resistance run. It's a little bit easier from my perspective, because a low resistance liquidity run is like, what liquidity? What do you mean, right? So no resistance, if we then define that by resistance being PD raise, and if you understand that of every PD rate we can potentially have a rejection, then right there, ideally we want to see a lag where we have no PD raise in that lag anymore that have not been traded into just yet. So all the resistance is gone, meaning that once we trade then above this high right there, we will do it very fast because there is no resistance anymore above in all those highs right there. The only thing we have is swing highs, and those swing highs right there is where the run then happens. So it's not something we can reject off of to then continue lower. So that's very important as well. So essentially it's PD raise, which is quite interesting. You can also make a separate video on that as well. I believe I made a separate video on that earlier as well. I took full trades, full TP, human mentor. Love that. That's insane. And that's all credit to you, my friend. That is all credit to you. Outside of the norm, but could you look at xauusd? Thanks for everything. Well, I like those outside of the norms, to be honest. They're always quite interesting because I've never looked at this before. So it will be very interesting to see what it wants to do. Let me see. I believe that's the right one. If it's not, then you can also correct me if I am wrong. Let's look at the monthly first. Monthly, right here, we do have quite a big rejection that we are currently seeing. So again, if it wants to continue higher, we should ideally create a monthly value gap higher, which we are currently, what is it actually? It's quite new. This is very new. That's interesting. What is the market cap on this one actually? Interesting. But right here, if it wants to continue higher, ideally this should be a monthly value gap being created higher as well. So if we do not do that, then the early signs we already have that this might be a sweep to continue lower is, again, that we are not creating a fair value gap exactly overlapping with that high. Does that mean we're bearish? No, because overall we had more bullish arguments going into that than bearish arguments. But if then this fair value gap fills, or we have fair value gaps and order flow establishing on a lower time frame to continue lower, then that is quite suspicious. So right here on the weekly, I would argue as well that, did we come into that? No, not yet. Okay, so right here, I would argue that this next candle, ideally the next few candles, should be up candles. If that does not happen right there, then again, it looks very suspicious to continue lower and eventually reach these lows as well right there. So first things first, this next price action, I would ideally want to see higher prices, which leads me to think that on the daily right here, all right, if we can see a daily fair value gap continue higher, that could be very interesting, which we currently do not have. We also don't have a daily fair value gap continue lower. So at this moment in time, it's quite 50-50 for me. I would still want to look at higher prices overall if we can create a daily or a 4-hour fair value gap right here, which we currently just do not have just yet. So if we can create that, higher prices. If we create a bearish fair value gap right here, lower prices to potentially target this low right there as well, if that makes sense. Let me see. What do you think about limiting timeframes in a model to only 2 timeframes? For example, use 4-hour always for higher time frame and 5 minutes always for entry. Yeah, that's good. That's good. oftentimes I mention the time frames that I use. And if you want to limit your time frames, it's not necessarily a bad thing. It can sometimes be a little bit, you will miss certain things. So what I mean by that is you will just simply sometimes not see things coming, where it's like, oh, we already continue lower right here. Why do we do that? Because there's something on the higher time frame. But if you get so used to the 4-hour and the 5-minute time frame right there, you will also already see it coming on a 4-hour time frame, if that makes sense. So it's picking your poison right there, where the easier approach is eventually getting used to all the time frames, is just having a bigger overview of the market. But if you want to stick to one time frame, that's doable. It is doable, 100%. Do you ever look at S&P sectors like XLE? I personally do not. I do not personally. No. Hey, Oro, what is the BADJ on indices? Because the chart is different when on and off. This right here, if I turn this off, then this is the continuous contract. So it's I'm not too sure how it is exactly calculated, but it is the continuous contract, as in it's not taking into account the most recent contract where actually the trading volume is done. So right here, if I turn this on, now we are adjusted for contract changes, meaning we are now trading the most recent contract. So if you look at this, for example, on ES, you will see that we have different contracts. We have ESH, ESM, ESU, and when it's on, you are trading the ESH currently, the most recent contract, where actually the volume is, which is actually the one that is being traded. If it's off, you're trading ES1 right there, the continuous contract, if that makes sense. So it already switches automatically to the next contract. Nice feature, to be honest, that they added. Nice feature, sorry, not future. Let's see. Is indices better to trade than Forex? I think if you want more accuracy, then indices are quite interesting. Hello, I'm back. If you want more accuracy, then indices is quite interesting overall, because I do think indices, they have more accuracy to them. There's less manipulation overall in the market as well. It is, yeah, it's quite interesting if you want to get into those things. Is it really better? Really depends. Really depends on what your personal preference is. Not necessarily better, I would argue. Hi Aro and everyone. This week I started my elite trader funded account. So far, 6 win out of 8 trade, but with very low risk. I'm not too brave, but the REO method helps. Greetings from Hungary. Love that. I love that. It's all credit to you, my friend. And the risk will increase. As soon as you see it, all right, it's playing out over and over and over, you can slowly gain confidence and you will slowly increase that risk as well. Take it easy with that. That's no worries at all. What platform do you use for investing in stocks, and what is sort of your strategy risk management summed up quickly? The platform I use is Interactive Brokers as well, so IBKR. Then the risk management I use is dollar cost averaging. So I'll show you what I mean really quick right here. These are some of the pairs I'm interested in. So for example, Palantir right here. It's quite an interesting price action. Now, it's quite difficult as a trader to look at this as an investment, because you will quickly look at targets, at your stop loss, etc. I just want to look and make use of the trading skills right here to look at potential long-term investments. So for example, Shopify, the monthly value gap right there, I think it has long-term potential. Perfect. Shopify right here, monthly value gap. If you reach that, I would like to invest some with the first target right there. So if we do not continue higher off that, I don't have a stop loss. As in, I'm just holding it for the sake of long-term investment as well. I'm just trying to get the better entries for that long-term investment. All-time highs, I do not invest above all-time highs. So if we reach all-time highs, either I'm already in the trade or I'm not looking to get into the trade anymore. So that's how I go about it. When Fun Friends is launching, any hints? Currently, the website and the dashboard is actually in construction, and you can expect it potentially around, what will it be, 2 months? 2 months. 2 months, 3 months. But again, nothing confirmed just yet. So depends on quite a lot of factors that are outside of me as well. Do you use ultra widescreen monitor? I used to do it actually, and you can actually see it in my previous videos that I did use them. That's why the charts were sometimes a little bit vague as well, really stretched out. But I don't anymore. I just have it's a 5K monitor. It's the Apple Studio display. That's the monitor I have. And right now I have next to me is a laptop to read the chat. We can't see your, sorry. I'm sorry. We can't see your stock watch list because your thing is in the way. My room is in the way. This is my stock watch list right here. Excuse me. Let's see. If price reaches a PDRA on Asia session, is it a high probability? It's actually a really good question and something I wanted to go over actually early on as well. Where let's say EU, for example, comes into a PDRA during Asia. Is it a high probability? If Asia already creates fair value gaps out of that PDRA, yes, then it is more likely that if Asia is already volatile, London will just follow through on whatever Asia is already doing. But on Asia majors as well, if we come into PDRA during Asia, then that is perfectly fine to trade. It's perfectly fine to trade. Where in a euro-US dollar, for example, I would still want to wait for London actually before I take a trade. Will fair value gap strategy remain forever or it will change? Well, that's a good question. And again, can I see the future? Definitely not. But I have my good logic backing that I believe it will never change, because there's always going to be some way or form to show intention in the market. So whether it's called a fair value gap, whether it's called an imbalance in price action because it's moving too fast, we always need to come back towards that place and we can always make a story around that. So in that sense, since there is always a market that is moving, so there will always be fast price action and slow price action. That fast price action will create fair value gaps. So in that sense, it will always stay there. Please tell about Bitcoin when to take profit before it dumps. Well, if depending on where you are in getting involved, because currently I would not want to get involved anymore, and not necessarily because I don't think it's going to continue higher, just purely because we are at all-time highs. And above all-time highs, it sort of becomes more of a guesswork than really knowing what it wants to do very accurately. So if you did not take profits yet and you are getting involved of this weekly value gap, which we talked about at that time, then right there, then I would definitely look at a take profit right there, where we are currently at. What side of the market maker model is low probability? If we are looking at a market maker buy model, then the market maker buy model right here is the low probability happens on the sell side right there. And if we flip this around and we look at this and we look at a market maker sell model, then the buy side is low probability and the sell side is high probability right there to actually take and to look for a trade. All right, let me see. All right, so Hope dropped a Discord link again. I'm going to mention it again. I mentioned it at the beginning as well. That is a link for REO students, YouTube students. Please know that I am not involved in creating that Discord. And the reason I mention that, because if something scammy, if something sketchy happens in those Discords, I am not directly involved. So please know that I have nothing to do with that in that sense as well. So please keep that in mind. Keep that in mind that I am not affiliated in any way or form with that particular Discord. So if something sketchy happens, then it's not me. It's not me. Let's see. My Telegram, my personal Telegram, is in description for the channel, for the overall announcements, etc. What is your feeling about market without the chart looking we have to go down correction or to turn bear market so slowly? I'm not sure what you mean with that, my friend. Not too sure. But if it's just without looking at the market as in it's just fundamentals, I'm not too big of a fan of that. I oftentimes see people saying, what is it? I oftentimes see people saying, we have seasonal tendencies coming up, so we must continue lower a little bit. It's all speculation, as in the chart will tell you exactly what it actually wants to do. Fundamentals potentially tell you what it wants to do on long term. I definitely believe in that, of course. We can't deny that. But in the short term right here, the technicals will exactly tell you what to do. Can you show the crosspairs that you trade? Yes. These ones. These are the ones that I trade right there. And you can probably see only the GBP are selected right there because they have news for an ID next week. What about GBP New Zealand dollar? I'm glad you ask. I'm glad you ask because it is very interesting right here actually. Well, I say interesting, but if we take a look at the monthly really quick, can potentially continue higher. Weekly is more interesting. We have a weekly value gap right there. So now the question becomes, do we want to reach for that weekly value gap, or do we already want to continue higher off of something right here? Because we do have a sweep of that low right there. That daily value gap that we might create, the bullish value gap, could be very interesting. We have 4 hour actually already confirmed right here. So this could continue higher off that 4 hour value gap already, which as well could be very interesting. And the reason I say this is that we need to be sort of careful here, is because if we do not show signs that we do want to continue higher off that 4 hour value gap, then I would want to immediately wait for this potentially that weekly value to trade towards it or trade off of it. In the meantime, again, I would want to wait right there if we do not hold that 4 hour value gap. So that's quite important to understand as well. Euro CHF. Let's see. Euro CHF. What are we doing on the monthly? Monthly, no value gaps continuing lower, so we could potentially reach that high right there. On the weekly value gaps continuing higher, so important to note those down as well. Same scenario, very similar to the GBP New Zealand dollar. On the daily, we're not necessarily coming off of anything. So are we looking at anything clear? Not really. I personally would want to wait for either already fair value gaps higher, ideally on the daily, or this weekly value gap right there to trade into that to then potentially continue higher. Is there a clear market maker model right now? No, because we don't have clear context, if that makes sense. What site do you use to check fundamentals? I don't really check fundamentals myself. If I do check it, then the first website I check is Forex Factory. After that, I might go into things like MyFX book, etc. It's also difficult fundamentals because usually you get people's assumptions in those articles where people say, it's extremely bearish for the dollar, this NFP release. And then you'll see the dollar continuing higher, which was seen by the chart. So it's like, yeah, what can I say? What can I say? Hey, thank you, my man. Thank you. Let me see. What is this? Where do you live now? And New Zealand dollar, Canadian dollar. I do not live in New Zealand dollar, Canadian dollar. No. I live currently in Medellin, in Colombia. So the background, the beautiful garden, or at least the summer vibe you might be getting, that is Colombia. Let me see. Which one did you mention? New Zealand dollar, Canadian dollar. New Zealand dollar, Canadian dollar, right there. Oh, one that. No. We can't do that. We can't do that. Must be forex.com. No, I'm joking. If you're choosing a different broker, that's no problem, by the way. That's picking your poison. There's no real difference between that as well. New Zealand dollar, Canadian dollar, monthly is looking quite interesting because we are currently continuing higher off that order block for value gap. Very nice. 2 candle rejection, first candle right there, getting swept, previous candle low. Perfect. So right now, what can we do? Potentially continuing higher right here as well, reaching these highs. The last time I charted this is quite some time ago. It's even when I used, I'm not too sure why I use these. It's off topic, but I use these in YouTube videos as well. I can't even see them myself anymore. So, well, I got a lot of comments about it as well, which is quite funny. Anyway, what we are seeing right here is we're running into this order block right there. Now, this fair value gap is quite interesting because if we want to continue lower, we should continue lower off of this fair value gap. We see we're already running into that fair value gap right there. And after that, same story like we just saw on the monthly. This candle is a down candle. Perfect. Absolutely perfect. Next candles should ideally continue lower as fast as possible, creating a new value gap. Does not happen. So as soon as we trade above that rejection, it's already fine to look for new trade ideas to continue higher. On the 4 hour, we do not respect that. We do run into the order block right there, which we continue higher off of. Is there a clear discount rate currently to continue higher off of? Not really, in my opinion. So if we can create a new fair value gap, which would be a new clear discount rate to continue higher off that, could be very interesting right there as well. But higher prices is definitely what I'm leaning towards right here. Could be very interesting, actually. Let's see. Inversion fair value gap on a daily, the dollar, do you use that? I personally do not use inversion fair value gaps. As in, I look at it from a, from a sharp turn standpoint. So in some way I might be using it, But I'm not looking at it from the perspective of this right here is now turning into resistance. That makes it, I touched on this, actually, that's quite funny that you ask it. I touched on this in a recent video where inversion fair value gaps, they just, personally, they don't make sense to me because you lose all accuracy. Well, if you're going into SMC and you're going into the whole ICT space, you're looking for more accuracy, right? And when we then use inversion fair value gaps, doesn't it become very random? Because usually what are we doing? We're just continuing lower off of something that's on the right. So this right here is actually a perfect touch into it. I agree. But it's also just that swing high right there, which usually is also just a fair value gap towards the right side. So if you mark out all these, then will you see a rejection? Yes, this can act as support and resistance, but the same way that this random line right there can act as support and resistance. But currently, look at the bodies right there. That's perfect support. And this is just a random line that's on my chart. So it's, to me, it's just, it's, I don't know, for me, it's very random. For me, it's, I don't like to use it for that specific reason as well. Where they can be seen, they can be used as fair value gaps that are being disrespected, which indicates overall that we want to continue lower potentially. But in itself, areas to trade off of, no, I don't like it. Let's see. Sometimes you talk about false resistance. Can you explain a bit more? Thanks. I'm not too sure what you mean with false resistance. What do you mean with false resistance? You would have to link a video or something. I'm not too sure if I've even mentioned that. I'm not too sure. So the market maker model, silver bullet, leads to the understanding of what we mentioned a little bit earlier as well. Low resistance liquidity run. So when we don't have any resistance anymore, that leads to a silver bullet entry. So if we take a look again at Australian dollar, US dollar right here, this in itself is not necessarily a silver bullet that you would usually look at, but this right here can be classified as somewhat of a silver bullet because we have no resistance after that. So the silver bullet is where there's no resistance left. That is what it makes a silver bullet. Are your house tour? Yeah, I can take the camera with me. I can just walk around. Would be quite funny. Let's see. Hello, could you briefly explain IBDA market cycles? I still do not understand the concept that price cannot go from consolidation to reversal. Yeah, the first thing I would say about that is do not limit your mindset to that. So what I mean by that is, it's oftentimes when people learn that, they see, all right, we cannot go from consolidation to reversal. So after every consolidation, we should now see an expansion, or we should see this or that. So it limits your overall mindset to what you can see in the charts. It's a very limiting belief. So that's quite dangerous to have that belief, in my opinion. Does it make sense? Yes, it does make sense. If we break that down, again, I personally don't use it because you can already see it in the chart and it's already incorporated into my trading plan in a sense without paying attention to it. This is a consolidation, and the consolidation will lead to an expansion right there. And the expansion right there is eventually the reversal, but they don't classify it as a reversal. They classify this first leg as an expansion right there, which then leads to, I'm not sure what can be next according to those rules. But anyway, that then leads to a reversal right there, which again leads to then a retracement to then an expansion. So that's the thing. The way you can also see it is fractal. So for example, when we create a fair value gap, we oftentimes create consolidations as well. The reason for that is because, for example, when we do create a fair value gap, we have first an expansion right there, which leads to a consolidation. That consolidation right there is the third candle of the fair value gap being created. The reason we do that is because then the path to trade back into the fair value gap is overall easier. So on the lower time frame, that then becomes a consolidation right there. Which again, same story, then you have consolidation, then it just trades back into the fair value gap. But we don't need to overcomplicate it like that. It's very specific rules with overall doesn't really benefit you, in my opinion, again. Ario, a bit about SMT. Do we need to focus on it, or will it be enough to master order flow / fair value gap? Yeah, I tweeted about this actually last week, I believe, this week, that I personally do not use SMT. And the reason for that is because SMT, I believe, if you can find the pair, the good instrument that you want to trade, then SMT happens regardless whether you are paying attention to it or not. So it's almost, for me at least, again, according to my data, my personal data, it is irrelevant. For some people it might be relevant, but that is depending on your data. So I personally don't use it. Fair value gaps, order flow are more than enough to be profitable. You don't need SMT in that sense as well. I've used it in the past again, but according to my data, it was not an extra profitability factor, if that makes sense. So I personally don't use it. Ah, let me see. My bad, RT Money. My bad. It blocked the thing again. You're right. Excuse me. You're right. My bad. I was also thinking that of that, Sadak. Hurry up, bro. Liver to a Man City playing. I also saw that. That's funny. About kill zone, your concept in ICT, is it the same? Yeah, for kill zone and for example, kill zone, the understanding, or well, not the full understanding, but just the name fair value gap. That's all from ICT, right? So that's not mine at all. So kill zone is, for example, just an ICT concept in itself. But my own understanding is added into that. So when I teach about kill zones, I might have a different explanation of that. But the term kill zone, the times of the kill zone, that's fully ICT. Do you support and resistance areas? Well, we could argue that I am using that in the form of fair value gaps, order blocks. It's all somewhat of a support and resistance. Only thing between me and the difference between me and support and resistance is that I have somewhat of a logic behind it, which makes me comfortable to use it in a sense. So yeah, that's mainly it. Can you review the 4 trades you took this week? Yes, my friend. Yes, I can. First one is not the first one I took actually, but it's one of them. Australian dollar, US dollar was right here, which was this swing low right there, which was also on the basis that the dollar might continue higher. So this was the first trade right here, where we created this sharp turn to continue higher. I did not immediately execute. I went into the 1 hour right here to look for just simply an expansion higher. So my entry was, if I remember correctly, it was at 100 right there. Let me see, 100. My stop loss was not all the way below those lows because I did not. Again, the retracement all the way back was very unrealistic after we already came into the 4-hour value gap. There's already volatility going higher. This is where right there, targeting a 1 to 2 above those highs. Of course, in hindsight, I should have let it run, but I like my 1 to 2s. I'm perfectly fine with that. So right here, this was the first trade, which was arguably somewhat of a swing trade. It was also entered during Asia. So again, Australian dollar, US dollar, you can enter that during Asia. That's perfectly fine. So next trade was, again, not necessarily next trade. It was one of the other trades. Here on the 4-hour, it was this 4-hour value gap on ES right there, which the whole premise was potentially continuing lower. But after we disrespect this 4-hour value gap, I want to look at that 4-hour value gap to continue higher. So I went into the 1 minute actually, not necessarily going into the 5 minute. There's different trading plans as well, where the first trading plan you saw is more filtering process trading plan. It's a delirium trading plan, as I like to call it. This is a flow trading plan. So we saw order flow getting established bullish after this 5 minute value gap. After that, my entry was sitting right there, around, I think it was right there, and covering these lows, and you see that low right there, to then target higher as well in the form of those highs right there. Got out a little bit earlier right there as well. Hindsight, I also should have let it run. It's teaching me a lesson. I should let my trades run, but I'm fine with a 1 to 2. My other trade was NASDAQ. Let's see. It was on the 1 hour, and it was whilst we were moving lower right here. So we came into this fair value area. We had the rejection, which is this line right there. The rejection to potentially continue higher, which filled. So after we filled, next target could be those lows. So right here, this 1 hour value gap right there. Then if we dive into that on the 1 minute, what do we see? And all this is, it's quite funny because all this just leads back to the overall context, etc. It's in every video that I talk about. Right here, my entry was at this moment in time, once we reached below that low, covering this high right there. And it was this 1 to 2 sitting right there. That was one of the other trades on NASDAQ as well, where we also came into a 5 minute value gap, which was above this high right there. And it was just an extra confirmation based on candle signs right there, actually. Very interesting. Then my other trade, which was on, it was one of the crosses. Which one was it? Using CHF. Which one was it? Which one was it? Let me see. Actually, I need to really quickly check. Daily, $2 CHF. No, 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 no. I'm not too sure which one it was actually. Euro Canadian dollar, no. Eurostat, no. CHF JPY, no. Canadian dollar JPY, no. Canadian dollar CHF, no, no. Stand dollar, JPY, stand dollar. I am not too sure, to be honest with you. Let me check really quick which one it was actually. It was a break-even trade, by the way. It wasn't a winner for me. The last one was a break-even trade. It was not necessarily the last one I took, but it was one of the ones I took. Let's see. It was Australian dollar, New Zealand dollar. Aha, it was this one. Yeah, okay, it was this one. So here, we could continue higher overall. We have nice targets in the form of those highs. On the 4 hour, what are we seeing? We have this 4 hour value gap sitting right there, which we could continue higher off of. Very nice price action. My mistake right here, and I did make a mistake. I definitely made a mistake for myself. Off of this 50-minute value gap right there, I confirmed it on the 1 minute. And my trade was, and I actually recorded this live as well, where I took this trade and the trade was sitting right there. That was my, well, this was my original trade ID right here, covering these lows to target this line right there, a 1 to 2. So on TradingView, it actually played out, but my fill was so horrible. I got filled right there where my stop loss was still at the same place. So it was not a 1 to 2 anymore. It was a 1 to 1. Eventually I went break even because I still want to let it run. I still believed in the overall high time for ID, but it did not reach my take profit. So it was a break even. So a bit of a shame if my fill was better. Again, I don't necessarily want to blame it on the broker because that was just my fault. I just shouldn't have traded the 1 minute at that moment in time as well, especially since it's a cross pair. I should have just traded the 50-minute and covering these lows right there to then turn into a swing trade more so. So it is what it is. All right, what was the most difficult duration of your trading career? How did you overcome it? And where do you see yourself in the next 5 years? Also, Nifty 50 analysis. Well, the most difficult one was breaking out of sort of a shiny object syndrome cycle, where it's like you think you never have enough knowledge. And that was the most difficult one for me to break out of, where I already had enough knowledge. That was very difficult to understand, to break through that. And that led me as well to then understanding overall the path to profitability. Where do you see yourself in the next 5 years? Still trading, potentially more on the higher time frame. So even more higher time frame than I already do. Next to that, I also want to do things besides trading. So not necessarily trading itself anymore. I want to start trading start business besides trading. So don't have anything to do with trading itself. So not a prop firm, not anything, if that makes sense. Also Nifty 50 analysis. Yes, my friend. Yes. Nifty 50. This again is at all-time highs, and the reason why I have not personally looked at Nifty is because it has been at all-time highs for all that time. This daily value gap was interesting to us right there. We have a fair value area as well right there, which again we can now look to still continue higher as well with a new daily value gap sitting right there as well. This could definitely be interesting to continue higher overall. 4 hour value gap right there as well to continue higher. Overall, all-time highs, not too keen to get involved. Check your journal. Yes, that's what I did. Animals in Colombia a lot. Some snakes around your home. Yeah, there was actually a snake in the garden the other day. Not too crazy, but just a snake. How do you select the assets to trade after picking a group of pairs for the week based on time and news? That's a really good question, and it all comes down to arguments. So let's break this down right here. GBP Canadian dollar for me is on the waiting list. There's a reason for that. GBP Australian dollar is on the short list, so I'm interested in shorts. GBP JPY is on the long list, so I'm interested in longs. GBP New Zealand dollar is also on longs, so I'm interested in longs right there. Now, I'm not equally as interested in all those pairs, as in some will be higher on my interest list. And what I mean by that is, if we look at GBP New Zealand dollar, we mentioned this earlier, we have a weekly value gap below this 4 hour value gap right there, which could be a trade ID. So in itself, there is some bearish arguments right there that could say we can trade into that weekly value gap. So I'm not 100% interested in that right there, which would move it down the interest list. If we look at GBPJPY right here, if we get a 4-hour value gap right there higher, then there is no reason for price to return anymore. So the weekly is supporting the ID. So where GBP/USD has a chance to continue lower into a weekly value gap, GBPJPY doesn't have that. So right here, this would already be higher probability. This would be more interesting for me to trade that. GBP/CAD is on the waiting list right here because we reached a major target right there. So that's also when we have reached that target, I'm not too interested in getting involved anymore. Ideally, a new value gap overlapping with that exact high to continue higher off of that. But other than that, not super interested. GBP/AUD, we are sweeping that high right there, which is seen by a daily sharp turn as well. We can potentially continue lower off of that right there. But as well, we have 4-hour value gaps going against us. So we were running into resistance overall. So to break that down, GBPJPY is the highest, is at the top of my interest list. After that, it's GBP/NZD. After that, GBP/AUD. After that, GBP/CAD. So that's how I form which one I actually want to trade, seeing what are the arguments on that as well. Nvidia, let's do it. Nvidia had a huge drop, I heard, but overall, if we look at the perspective right here, it's not too crazy of a drop, in all honesty. If we look at the monthly right here, the weekly, we can overall still look to continue higher. We can potentially retrace towards that fair value area. It's a little bit difficult because, again, we are at all-time highs. So ideally, I don't want to look for new investment opportunities or anything. I want to wait right there. But this can still definitely look to continue higher as well, unless we start to create this value gap right there on the daily time frame and create a new daily value gap lower off that. Then I would expect a retracement towards the recent all-time highs that we had. So right there. In the meantime, can still look to continue higher. All right. I am going to end it here. Thank you, everyone. Thank you, everyone, for being here. I will see you at the next one as well. And yeah, I'll see everyone around. All right. Remember what we talked about. Be careful as well with CPI. Don't do anything crazy. And thank you, everyone. See you at the next one. Perfect.